The Bank of Japan keeping its benchmark interest rates unchanged and in negative territory. I'm joined now by Steve Friedman, Senior Investment Strategist at BNP Paribas Investment Partners. So Steve, nothing new out of this Bank of Japan meeting. No additional stimulus measures either, but do you think that's perhaps next on the table for them?
I think so. I could see them engaging in some additional QE down the road. I think it makes sense to wait for the time being. I don't think they're in any particular rush. I think they want to encourage continued progress on structural reforms. But yes, I do think down the road some additional quantitative easing is likely.
And rates are still at, what, negative 0.1%?
Yes. Mm-hmm.
All right, and speaking of central banks, we're gearing up for the Federal Reserve's March statement on Wednesday. What do you want to hear from the Fed?
Well, let me start by saying I think they have to feel pretty confident about some of the recent developments. They've seen oil prices stabilize and even head a little bit higher. Stocks are a little bit higher. The U.S. data flow has actually been fairly positive. And if you go back a few weeks, you'll recall there was a lot of sentiment in markets that central banks were working at cross purposes or that they were out of ammunition. I think these concerns have faded as well. So they have to feel pretty good going into this meeting. At the same time, I think they are aware of some of the downside risks to growth. So I think that they will opt to be patient at this meeting. What I'm looking for specifically is signals about whether they will feel confident enough in the outlook that they'll continue to raise rates, resume raising rates in the second quarter. Okay,
so pause on a rate hike in March, but perhaps one in June and or September?
Yes, and actually, to be frank, if we see some of the recent developments continue, if we see inflation continue to firm, growth numbers coming in above trend, stability in the dollar, and there's even a possibility that they could go as early as April. And I think they want to retain the optionality to do that.
All right, so they'll keep all options open. Let's talk about the markets. We've had a nice rally in stocks, 4 straight weeks of gains. Can we continue on this trend?
Well, I think there are a lot of reasons behind this rally that we've seen. First of all, oil prices have been heading higher, as I mentioned. I think that's seen globally as a sign of confidence in the global outlook.
Or at least that the risk of a global recession is dropping.
Exactly. Central banks are continuing to ease policy. The Fed will continue to signal a gradual approach to raising rates, even if they do resume raising rates in the second quarter. So these are the sort of developments that in combination can lead to some extension of the recent rally that we've seen in risk assets.
All right, and in terms of opportunities across the markets, where should people be looking? Because we continue to see banks cut their S&P 500 forecast, most recently Morgan Stanley, now at 2050 for the end of the year compared to 2175.
Right. So that's a very interesting question. In some sense, the best opportunities in near term, perhaps those are behind us, seeing that credit spreads have begun to tighten again, stocks have rallied. Now, I've painted a fairly optimistic outlook for the next month or two in terms of risk assets, but we shouldn't forget that globally, momentum in the economy has been slowing. The Fed will continue to raise rates, and I do think that growth in the U.S. will slow towards trend. So I do expect greater volatility ahead.
All right, Steve Friedman from BNP Paribas. Always great to see you. Thanks for coming by.
Me.
I'm Scott Gamm, and you're watching The Street.